Welcome to our video on funds and how to get started with investing in them. In this video, we'll cover the basics of what funds are, the different types of funds available, and how to get started with investing in them. Funds are a popular investment vehicle that pools money from multiple investors to purchase securities. These securities can include stocks, bonds, real estate, and other assets. Funds are managed by professional managers who make investment decisions on behalf of the fund's investors. This allows individual investors to gain exposure to a diverse range of assets without having to purchase them directly. There are several different types of funds available for investors to choose from. Some of the most common types include mutual funds. These are the most popular type of fund and are typically managed by professional fund managers. They invest in a diverse portfolio of securities, such as stocks and bonds, in order to reduce risk. Mutual funds are a great option for investors who want to gain exposure to a wide range of assets and are comfortable with a moderate level of risk. Exchange-traded funds, ETFs. These are similar to mutual funds but are traded on stock exchanges like individual stocks. They also invest in a diverse portfolio of securities. ETFs are a good option for investors who want the convenience of trading funds on an exchange and are comfortable with a moderate level of risk. Index funds. These funds aim to replicate the performance of a specific stock market index, such as the S&P 500. They are a low-cost option for investors who want to gain exposure to the stock market. Index funds are a great option for investors who want to track the performance of a specific market and are comfortable with a moderate level of risk. Bond funds. These funds invest in a portfolio of bonds and are a good option for investors who want to earn a steady income stream. Bond funds are a great option for investors who want to earn a steady income stream and are comfortable with a low to moderate level of risk. Real estate investment trusts, REITs. These funds invest in real estate properties and are a good option for investors who want to gain exposure to the real estate market. REITs are a great option for investors who want to gain exposure to the real estate market and are comfortable with a moderate level of risk. When it comes to getting started with investing in funds, the first step is to determine your investment goals. Are you looking to earn a steady income stream or grow your wealth over the long term? Your investment goals will help you determine which type of fund is right for you. After determining your investment goals, the next step is to do your research. Look at the performance of different funds over time and read up on the fund managers and their investment strategies. This will help you identify which funds align with your investment goals and risk tolerance. It is also important to look at the fees associated with each fund, as they can have a significant impact on your returns over time. Once you've identified a few funds that you're interested in, you'll need to open an account with a brokerage firm. This is where you'll be able to purchase and manage your fund investments. When you are ready to invest, it is important to consider your risk tolerance. It is important to note that all investments come with some level of risk. You should invest in funds that align with your risk tolerance and invest in a diversified portfolio. It is also important to monitor your investments and make adjustments as needed. This may include reallocating assets or changing your investment mix as your goals or risk tolerance change over time. It's also important to review your portfolio regularly to ensure that your investments are still aligned with your goals and risk tolerance. One key factor to consider when investing in funds is the fund's expense ratio. The expense ratio is the annual fee that a fund charges to cover its operating expenses. This fee is expressed as a percentage of the fund's assets and is taken out of the fund's returns. It's important to compare the expense ratios of different funds to ensure that you're not overpaying for management fees. Generally, funds with lower expense ratios will result in higher returns for investors over the long term. Another important factor to consider is the fund's diversification. Diversification is the process of spreading your investments across different assets and sectors to reduce risk. A well-diversified portfolio will contain a mix of stocks, bonds, and other assets. This helps to reduce the overall risk of your portfolio by spreading your investments across different asset classes. A diversified portfolio can also help to mitigate the impact of market fluctuations on your returns. When it comes to assessing the performance of a fund, it's important to look at both its historical and current performance. While past performance does not guarantee future results, it can provide insight into the fund's investment strategy and risk management. Additionally, it's important to consider the fund's benchmark, which is typically an index of similar securities. By comparing the fund's performance to its benchmark, you can determine whether it is outperforming or underperforming its peers. Another important aspect to consider is the fund's liquidity. Liquidity refers to the ease with which an investment can be bought or sold. Mutual funds and ETFs tend to be more liquid than individual stocks or bonds because they can be bought or sold on a daily basis. This makes them a good option for investors who want to buy or sell their investments quickly. In conclusion, funds are a great way to gain exposure to a diverse range of assets and allow you to invest alongside other investors. By understanding the different types of funds available and determining your investment goals, you can start investing in funds and grow your wealth over time. It's important to do your research, consider your risk tolerance, and regularly review your portfolio to ensure that your investments are aligned with your goals. It's also important to consider the fees, diversification, performance, and liquidity of the funds you invest in. Remember to always do your research and consult with a financial advisor before making any investment decisions. We hope this video has been helpful in getting you started with investing in funds. Remember to always do your research and consult with a financial advisor before making any investment decisions. Thank you for watching, and we'll see you in our next video.